What's up, everybody? Stacking Surfer here, your favorite YouTube stacker. And I am back at Irvine Spectrum with the remains of a caramel apple. This thing was good and it's almost gone. It was awesome, guys. Rocky Mountain Chocolate Factory, pick one up next time you're around. Good little apples. So today we're going to talk about silver allocation. What percentage of your portfolio should be silver? What percentage of your net worth should be silver? We're going to talk about when you should stop stacking silver. And we're also going to talk about how fast you should do it, okay? We're going to hit all these things. What I want to do, though, is tell you that I love the comments that are coming in. And so keep the comments coming in, guys. And I want to learn from you on this as well. You know, I'm doing this channel to give back to the community, but I'm still learning. So let's get down to business. Hit it. Stacking Surfer. The life topic, I'm your best friend. Balances in your bank instead. All right, so you're still here, that's good. I was worried you were gonna go run off and go get a caramel apple. So here's the deal. This is a hard one for all of us, and it's going to differ for each of us. So one thing I'm gonna say is my intro was completely inappropriate. There are no shoulds in any of this, okay, guys? There is no should have this much, should have that much, should do this, should do that, okay? It's all up to you individually, and it's going to differ by person to person. So first off, I am not a financial advisor. You should seek the advice of a financial advisor in anything you're doing that has to do with money. If you happen to find one that likes gold and silver, DM me. I'd be interested in talking to them. I haven't found one yet myself. What I will tell you, though, is what you're hearing is my thoughts and some of the things that I've thought through, as well as some of the things that I am doing. So I'm going to go over 5 things that I think are important to consider to help you determine how much silver you should be stacking. Are you going to hit a point where you finish? And what kind of silver to be stacking? Now, I've talked about the different kinds of silver in my videos where I talk about my 10 different ways to stack. My 101, 102, part 1, and part 2 videos when we talk about some of the best coins to stack, rounds to stack as well, and how to get started. Okay, so I'm going to assume you guys have watched those. If you haven't, please go and watch those after this. And if you haven't done so already, hit the thumbs up and also the subscribe and the bell icon. That really helps the channel grow. And we want to get this information out to as many people as we can. So I'm at Irvine Spectrum right now in Irvine. And if you guys can see over here, we've got Torpedo Comics. I'm going to have a video coming out real soon about Torpedo Comics. And this coat's killing me, guys. And it's going to be a cool video. I think you guys you'll really like that. And it's about coins and comics and grading and all of that. But let's get down to what you guys are here for this video today. Allocation. Let's talk about it. So first off, when you look at net worth, okay, a lot of us have houses, okay? Some of us aren't there yet. You guys will get there, I hope. And when you have a house, you have a down payment that you put into it, and then you have the loan that you have on the house. And as that house value goes up over time, you gain equity. So that becomes part of your net worth. When we're talking about silver allocation, we're going to take that completely out, okay? I'm going to take your cars out too, if you've got cars. So if your house is paid off, your cars are paid off, or if you've got loans on them, take them out. We're going to talk liquid assets right now. So what are liquid assets? That's going to include things like precious metals, okay? It's going to include things like bonds, stocks, or another term for that is equities, okay? It's also going to include things like crypto and Bitcoin. It's going to include cash in the bank. It's going to include cash at your home, or coins for that matter. I'm also going to include food. If you've got prepackaged food, it also kind of includes that. Now, most of us aren't going to have a whole lot of that, so it probably doesn't go into your equation, but it is important to have, and it is something that is fairly liquid that you can consume and take the cash you would use to buy food otherwise and use that for other things. It's a little bit of a workaround, but those are the liquid assets that you have. There may be a few I'm missing out. Leave a comment below if I missed something on that. But let's talk about that. So let's say you have $1,000, okay, and you're trying to figure out how to allocate that. What do I want to do with the $1,000? Well, traditionally, if you go and talk to a financial advisor, and a quick side note, I am not a financial advisor. This is not financial advice. This is just the opinion of a guy that likes to surf and hang out at the mall and the beach, okay? So what I'll tell you guys, though, what I've heard from financial advisors is a lot of times they'll recommend having 5%, maybe 3 to 5% in precious metals. Right now, with the uncertainty, some of them may even recommend as much as 10. Well, I know a lot of people that are stacking and their liquid investable funds is much higher than 10%. I know some people that seem to be going as high as, like, say, 60 to 80%, and maybe some of you are 100%. Leave a comment below. What percentage do you have in metals, gold and silver? Let's keep it at that. In those two precious metals, when you look at your total portfolio. Well, why is that important? Well, let me tell you this. If you go 100% into gold and silver, and you have a flood like I just did, you're going to have to sell some of those metals to pay for the remediation, or you're going to have to go get a loan. Okay, and a loan's going to have interest that you're going to have to pay, and unless you think your metals are going to go up that much higher within the time period that you have to pay it off, and at a much higher rate, then you're going to have to sell your metals. You're going to have to get your money from somewhere. So my recommendation is the following. This is something that I've tried to do. Not financial advice again, guys. When I look at $1,000, I like to take $300 of that and have it be in cash, okay? You guys know my opinion on cash if you followed me for a while. If you're going to leave it in the bank, get multiple accounts so that your cash is spread out from different banks in case one of them fails or you have a hard time getting it out of the bank. Out of that $1,000, I would take, for me, I'd take $300 of it and I would put it in a bank, okay? And I'd put it in multiple banks. Now, the other thing you can do with that too is you can have some of that cash at your house. I do recommend having some cash on hand. What if the ATMs are out of cash? I'm going to do a little short on that. I went to Wells Fargo yesterday. Both ATMs are out of cash. And I was 5 minutes before the bank closed, and the line was too long and I didn't have time to wait, and so I couldn't pull any cash out. That kind of sucks. So if you don't have any cash on hand, you can't deal with situations like that. That's not even a bank run, or is it? I don't know. So I'd put, for me, $300 is going to be my cash, okay? The next thing I'm going to look at is precious metals that I hold and stack that I will not sell. Okay, the next thing I look at is precious metals that I'm going to hold long-term that I'm not selling. This is what I'm going to call savings, and it's what I'm going to call pass on when I die, okay? So for me, that's 10%. So that would be $100. $100 of that $1,000 is going to go into metals that are going into a safe, and no one's touching them, okay? The only reason I would touch those is if I had nothing else and I'm starving to death and it's the only thing that I can trade to survive, okay? That is not getting touched. All right, so that takes us up to 40%. The next thing that I do personally is I take another 10% and I'm using that for precious metals that I'm going to flip, okay? Oh no, maybe Surfer's not a real stacker. I'm a real stacker, guys. I stack a ton of metals. But I also have some metals that I'm going to flip. So recently I just bought a whole bunch of the Disney stamp series, graded PF70, that I'm going to be flipping on my eBay store. I guess it's an eBay store. So, you know, I do that too. So that takes me to 50%. What I look for the other 50% is traditionally I would take 25% of that and put it in the stock market. Into retirement funds, and the other 25% would go into real estate, okay? Now, right now, everything to me seems upside down. I sold my real estate, so that 25% went liquid. And then I pulled my money out of the stock market because back in October of 2021, I could see that we were gonna have a big crash. Now, I did not put it back in, and so I have missed out on a big upswing that just happened, guys. So, you know, not a financial advisor. I don't have all the answers. But I have become more concerned about the equities market and that it could still have a massive crash. I hear some people say it could go down as low on the Dow to 20,000. That would be, I think from today, like a 28% decline, which would be massive. Maybe it's more than that. I haven't followed the Dow recently. But I don't feel comfortable with it. And so I have taken a much heavier allocation into precious metals and into cash. I've actually gone a little heavier in precious metals than I probably would like to, and so I am thinning out some of my precious metals that I don't love. And so you saw in one of my other videos, I ended up having a flood and a big IRS bill that came in. That took a lot of my cash, and so now I'm selling some of my extra metals that I bought that I would normally have in other investments to pay for that. And I was able to buy right, so when I went to sell, I was able to make just a little bit of money, but I didn't lose anything, and that's key. Don't lose money, guys. That's the first rule of investing. Don't lose money, okay? That's kind of how I do things. So what does that mean? Well, when the economy starts getting better again and we're feeling like the US dollar isn't going to completely die, if that happens, maybe it doesn't, but if it happens or when it happens, when the real estate market starts to come back, I will be taking 25% of what I bought in metals, and I'm going to be selling it, and I'm going to use it to buy real estate. Real estate is a great way to cash flow and create cash flow and extra money that comes in that you can then put into other real estate projects, or you can put into precious metals. So you can continue to build your wealth. I think that's important. Metals do not reproduce. However, I do have a couple coins that have almost doubled in value, which is pretty cool. So, so that's that. As far as the stock market goes, I don't know. I've got a hard time with the stock market. It's not something I like to play around with too much. You know, if you find a brand you really love and you feel like it's valued well and you work with your portfolio advisor, fine, get in the stock market. But right now, everything seems overpriced to me, especially with a potential recession here, which, guys, it's already here, but they keep saying a potential recession. And until next time, peace out.